private lenders. To start off, this is me. I'm your host. I'm Chrissy with the American Association of Private Lenders. I'm the Director of Marketing and Education Services. And if you stick all the way around to the end of today's presentation, we'll have a special offer for you. It'll be a limited time special offer, so please make sure that you hang around. Then real quickly, just to show you how to interact, many of you have been on our webinars before, but for those who might be the first time joining, we'll show you how to use this menu. If you have a question or if you were asked a question to respond, go ahead and raise your virtual hand, and that's that little blue circle with the arrow in it on your menu bar. When we get to the point to ask questions, or if you come up with questions during the presentation, just go ahead and type them into that question box. We'll see that on this end. There's a big possibility Carolann will go ahead and answer your question through her presentation, but if not, we'll go ahead and we'll ask those questions towards the end of today's presentation. And the other thing that sometimes I fail to mention, because most of the time we have everybody on mute, but just go ahead and make sure that your phone is muted. And then today's recording is actually going to be available on our YouTube channel as well as our AAPL online. So this archive version will not be as exclusive to AAPL members as others generally are. So look for it to be uploaded within an hour after we finish. All right, going into our introduction for our fantastic presenter today, Carolann has had a relationship with the American Association of Private Lenders for many years in different capacities. She's been a C-level exec for over 20 years. She is the founder of Dekk Revenue Consultants. Carolann, get that? Isn't that great? I love the name of her company. She's a serial entrepreneur. She's a business growth expert. She has experience in building and launching crowdfunding platforms. Makes her perfect for today's presentation. Many of you may have seen her speak recently at Lend It, and then she's the largest crowdfunding conference globally, over 2,500 attendees, excuse me. But the thing to remember, and she'll remind you if it comes up if necessary, is that she's not an attorney or compliance officer or securities expert. So you may have the questions, and those are fantastic. Send them over. But if she can't answer them, we do have another avenue with our Ask a Lawyer column and some other relationships that we have through AAPL. So right now, I'm going to go ahead and change over so Carolann can take this presentation. And again, I just want to thank you all for taking time out today and joining our webinar.
Hear me?
There you are.
There I am. Thanks, Chrissy. And thanks everyone from the AAPL. I really appreciate being here today and you guys hosting these webinars. I am also a member of AAPL and have attended many of these webinars and really appreciate them as a benefit. So today we're going to talk about crowdfunding and some about the industry in general, very little. I'm going to really focus on what's relative to real estate, of course, and go over basically what crowdfunding is, some of the growth we've seen, the models that are out there. I've got a nice little list of platforms to talk about. And then also I'm going to talk about some of what the critics say and the opportunities for lenders and brokers. Most of what you see out there is really written from the perspective of just investors, people putting their money into your deals. And so today, as a member of AAPL, I'm very aware of the different role that we play as real estate investors, lenders, some of us are brokers, and so I wanted to include some of that perspective and talk about at the end what's in it for us. So what are the other things that come out of this? And so we'll kind of end on the opportunities and what the future is. So again, thanks again for having me. I'm excited to be here. And so I wanted to give you just 2 minutes of my history and how I got here. So I first entered into the crowdfunding industry in about 2012, and I was already working on a community platform for small businesses, which was, by the way, my third platform. And they asked me they put me in charge of researching what it would take to launch a crowdfunding platform for small to medium business enterprises. So I started doing research and talking to players in the industry and going to conferences and was just hooked on the concept. And part of the reason I was hooked is my personal mission in my business and in my life. And if you look me up on LinkedIn, you'll see that everything that I associate, I love the mission of helping businesses scale, creating jobs, and supporting entrepreneurs, of which I am one. So that's really what kind of drove me. Fortunately, and I feel very, very lucky that my company, Dekk, was contacted to be a part of the team to conceptualize a business model to launch a crowdfunding platform for real estate. And so this was very early on, and we really didn't have an idea of what it would look like 3 years down the road, and we didn't really understand a lot of things. And it was a really interesting, fascinating time. So we worked through the compliance issues, the user experience, and basically how we could take the offline model of private lending or peer-to-peer lending and reimagine it and scale it for this new world resulting from the Jobs Act, which was passed in 2012. And at that time, there were about 12 real estate platforms just getting started. Some of them are gone already, but some of the ones who have made it are Fundrise, Realty Mogul, and Carolann, which you guys may have all heard of. And they had just launched, and we were all at the first big crowdfunding conference. And it was a really exciting time. So fast forward to April 2015, at this latest Lend It, which is the largest crowdfunding conference, there was about 2,500 attendees, and I was really honored to have been asked to speak on a panel about real estate deal types. So there we were there, and they announced that there are now 85 real estate lending marketplaces or platforms. Of course, now they're all competing for deal flow, investor dollars, and attention in the marketplace. But so that growth from, in just over 3 years from 12 to 85 is pretty phenomenal. And this is such an important topic for all of us. So I'm really grateful to be here to be able to share what I've learned and what I've been immersed in. So what is crowdfunding? Well, there's a lot of definitions and a lot of terms used in the industry, and part of what I wanted to share was about the industry terms and things that you'll hear. The purest definition of crowdfunding is this. So crowdfunding uses secure websites to list a variety of real estate projects seeking financing to match those needs with investors individually contributing thousands to hundreds of thousands of dollars and to manage the legal setup, promotion, transactions, and reporting. There's a big component to technology that's really important in this crowdfunding world as well. It helps the borrower and the investor really scale their portfolio, and for the borrower to scale their business model as well. And it creates a lot of efficiencies. But the other thing is that I wanted to give you some framing and some insight into what's really happening if you don't know this already. So the term crowdfunding is used generically in the real estate investing world. And a lot of the real estate platforms now prefer to call themselves either online lending platforms is really popular or real estate marketplaces. And the industry really is less called crowdfunding now and is more called crowdfinance. You also may hear fintech thrown around, but that really is broad encompassing the banking industry as well. And what's happening is the reality is that these platforms need institutional dollars, and the institutional dollars want to work with the platforms. So there is some hedge funds and other institutional dollars in this as well. It's not all just and it works, and it's kind of tricky. It's not just all, Carolann, Dekker, and Joe Smith putting their $5,000 into a deal and owning that deal. It's a little more complicated than that. But many of the platforms, specifically Fundrise and Realty Mogul, are a great example. They are actually selling pre-vetted shares. They fund and underwrite the loans themselves. Unlike in other business categories like Kickstarter, you're only successful if you raise that full amount you need. So on Kickstarter, you put your business plan up, the crowd funds it, and when you get to 90% of what you fund, what you request, you're considered successful. But what we're seeing in the real estate crowdfunding is they're following the path of the crowd or the peer-to-peer consumer lending, where companies like Lending Club and Prosper, they've facilitated over billions in debt financing because hedge funds are putting money to work on those platforms. And I think this same path will transform our real estate industry as well. So crowdfunding is most similar to traditional syndications, but they have a scalable technology element. Deals are more transparent because all of the information is online. So that leads me to the Jobs Act. I'm pretty sure everybody's heard of this, so I'll spend just literally seconds on it. The Jobs Act, or the Jumpstart Our Business Startup Act, was a law intended to encourage funding of United States small businesses by easing various securities regulations. And what's great is it passed with bipartisan support and was signed into law by Obama in April 2012. In the Jobs Jobs Act. There are a total of 7 bills. Several of them were immediately enacted when it was signed. Title II opened up solicitation to accredited investors, so that's an important one for us. And so what is an accredited investor? Someone that has income of $200,000 or $300,000 with a spouse for the last 2 years and expects to remain the same, and a net worth, or has a net worth of over $1 million, either alone or with a spouse, but it can't include your primary residence. So Reg A+ is another important reg, but I'm not going to spend much time here because if you guys follow this series, Garachi's team did a really in-depth webinar dedicated to Reg A+. So I just wanted to bring it up because it's an important part of the journey, but for real details on it, you can go back and watch the Garachi webinar. But Reg A+ is one of the new rules. It has 2 tiers to it, up to $20 million in a 20-month period with other restrictions you're allowed to raise. And the second tier is up to $50 million in a 12-month period with other restrictions. It has a lot of reporting, file requirements, and other kind of reporting things that make it not as attractive as Title III, which is supposed to be coming this year, and we'll talk about a little later. So early crowdfunding examples, this is what we're experiencing is the online crowdfunding real estate. But, you know, as far back as the Statue of Liberty, when the French gifted the Statue of Liberty to us, it didn't have a pedestal. So Joseph Pulitzer launched a fundraising campaign in his newspaper, the New York World, and raised $100,000 from 160,000 donors. And that was in 1885. And Marillion, the band in 1997, they couldn't afford to come to the tour of the U.S., and so someone put out early on the internet, created a website and raised money to bring them over to the U.S. So there's a couple of examples way early on. And so there was 3 very early websites that I just wanted to talk about very briefly. Kiva. Kiva, of course, is the micro-lending site. And it operates much like a Sponsor a Children campaign. And this again speaks to kind of the different models that I alluded to earlier. You know, Carolann Dekker doesn't go and actually connect with the farmer in Nigeria who needs $25 to buy seeds. That farmer actually applies for a loan that's funded by Kiva itself and their funding partner. So they have a funding partner behind the scenes, and then we are, as the crowd, we are part of the equation, and we are directly connected, but that money has already gone to the farmer. However, if that farmer doesn't pay back their loan, we lose our principal. And there's never interest involved in the Kiva model anyway. You are really just, it's a donation. And then Prosper and Lending Club, that's the consumer debt models that we spoke about a little bit. Lending Club and Prosper, they both call themselves peer-to-peer lending model, but it's not entirely accurate. Both Lending Club and Prosper, they allow investments in a solid asset class of prime consumer credit, so both of these companies offer worthwhile investments. And as you guys know, Lending Club has gone public recently, and they both fund from the crowd, but institutional dollars are behind both as well. So let's talk a little bit about the growth. So worldwide crowdfunding rose by 167% in 2014. And so they were at $16 billion. And it's amazing. And this information comes from Mass Solution is the report, and they collected data on 1,250 active crowdfunding platforms. So the results reveal that crowdfunding platforms raised $16.2 billion in 2014, and which is an increase of over $6.1 billion in 2013. Now, this is unsubstantiated, but the research I did indicates that real estate crowdfunding generated $1 billion of that revenue in 2014. But I couldn't connect it to this report, but that number showed up in several reputable publications like Forbes and a few other online places. So take that with what you will, but it sounds pretty reasonable to me. So North America still accounts for the largest market. Let's see if I can get my thing up here. So North America is the largest market. Asia is second, and Europe is third. And so in 2015, global funding is expected to reach $34.4 billion. And the models that grew the most are lending-based. The lending-based models grew 223%, equity-based 82%, hybrid, debt and equity grew almost 300%, and royalty-based grew 336%. Donation reward-based grew a much smaller amount, under 100%, but still this is just huge growth numbers. And then by region, I think we covered that a little bit on the other slide, but North America grew the biggest. Oh, no, I'm sorry, Asia grew the biggest. North America still is the biggest. And the most active categories in 2014 were business and entrepreneurship, social causes, films and performing arts, and then real estate was fourth. And so they grew 6.25%. Yeah, so that makes sense. So that does correlate with the other number that I had found. And music and recording arts grew just under 5%. So, you know, real estate is the one that, going to these conferences, real estate is the one that got the most attention in 2015. I really saw over the last 3 or 4 years of conferences that I've been to is the really excitement of the real estate platforms. So these are some of the most interesting players to watch. Some of what I wanted to expose you guys today is who you should be looking at. And so we'll talk about kind of why at the end, but one of my favorites is Fundrise. And one of the reasons is that they really put in the effort, and they filed local public offerings with the SEC and state regulators in all the states. So not just accredited investors can invest, anyone can invest. And their minimum investment is $100. They underwrite and pre-fund every project, and they are commercial only at this point, but they also have done some really exciting projects like the third tower of the World Trade Center. Realty Mogul is really probably, I have to say, they're interesting, and also they're the best at marketing. Their owner and CEO and founder, Jillian, is incredible to see. If you ever get a chance to see her, she's really fun to watch. She is, so they provide access to equity and debt, and they really pride themselves on quick turnaround. Patch of Land is one that I know the people there very well, and they work with a lot of people like us. They work with a lot of rehabbers. They are very, very interested in working with brokers and private lenders, and they match accredited institutional investors interested in high yield, short-term, asset collateralized investments with real estate operators. So in that too, by the way, they're looking to work with you guys, but they're very, very interesting, and I respect these companies that I have up here and think that they're good companies to work with. So another one is Lending Home. Lending Home is really interesting. They're backed by Lending Club. And I would say that they probably are the most advanced, have the most advanced technology. They're also run by really, really smart entrepreneurs, and who I've met and talked to and had a drink with at the conferences. And the guys who run it, one of them got his MBA at I want to say it was 13 or 14, and others of them, another gentleman who's their head of business development had a very successful real estate business by the time he was 18. So these guys are really smart and someone to watch. They also have a great broker program, by the way, a great broker affiliate program. Co-Assets, they're interesting. They're an interactive networking platform, kind of listing. It's more like a listing service and lead generation, but they also really work with the stakeholders. So I thought they were interesting, worth mentioning. And also they have an offline model with networking events and expos. So I liked their model as something different to look at. Realty Wealth, they're commercial real estate, but they also work with net lease and commercial real estate investing. They make it simple, and it has a low minimum, $5,000 to invest, which is appealing to me as I look at this for kind of everyone. Another interesting one is Hotel Investor, INN Investor, if you're going to look them up. They're really interesting. They're the first nationwide investment banking portal created specifically for the hotel segment. They utilize an equity crowdfunding model to raise debt and equity. So it's a really interesting model, and I think they're worth looking into. They focus on securing project with select service, extended stay, and premium limited service. So Prodigy. Prodigy claims to be one of the largest crowdfunding investing platforms in the world. Their accredited investors are given the opportunity to invest in commercial real estate, and they have really fun, high-profile projects like in Manhattan for 10 grand. And what's appealing for that, I mean, it has that kind of market appeal that's going to get investors really excited. So they've got some of those, but they also have some really interesting projects around the country. And then iFunding. iFunding is another commercial retail, and they also do single-family residential projects with a low investment. But this one I brought up also because as lenders and brokers, there's someone that if you guys are looking to scale your business, these guys are all looking for deal flow. So these are ones that you should make a note of. I also have a free report that I'm going to tell you how to get on my website at topdekk.com that will capture some of this stuff. So I just thought if you're scrambling to write all this stuff down, don't worry, you'll get a report that has lists of great sites as well. So let's see. Yep, that was the last one. So I wanted to talk about some of the sample fees. I didn't go through and pull the fees out of every single platform because that would be extensive and boring, but I wanted to give you kind of an idea of what some of these guys charge. So I picked the ones that I had a little more knowledge of, and so one of the examples I pulled was Lending Home. So Lending Home this is what they offer to their borrowers. They do buy and holds with an LTV of up to 70%. 7% interest, term probably 12 months minimum, and 150,000 and higher. So with the refis, they do up to 70%, 7.5% interest, 6 months minimum. They were operating in 9 states at the point when I wrote this, but I think there are more now. I think they might be at 12. They were just adding them on like crazy. They might be at 12 or 15 by now. And those refis are between 100,000 and $1 million. And then, of course, purchase and rehab, this is where they're the most generous, and by the way, where they're the most active and really looking for deal flow. They'll go up to 80% LTV, 7% interest, in 6 months and higher. So I didn't put the points on here because they were kind of all over the place, and I think that's something, particularly as a broker or a lender, that if you're bringing your deals to them, I think that's something that you could work at. My understanding in discussions with them is that they really want to work with brokers and lenders and have a great broker program that helps you keep your costs the same and scale your business. And then patch of land. So patch of land, they do purchase, refi, renovation, and bridge. Even though they're located in California, if you look on their site and look at what they're offering, it's been mostly in the East Coast. They were heavy in New Jersey for a while, and California is really competitive, and money is not that expensive here. So they were smart in going to the East Coast. They also do a lot of educational components, and that's how I've connected with them as well. But they do single family, multifamily, condos, mixed use, office, loan to value 80% or ARV 70%, and their loan amounts are between 100,000 and $1 million, and term 1 to 24 months, interest 10%. And they will work anywhere nationally, but like I said, their focus most recently has been on the East Coast. So I wanted to talk a little bit about what the critics are saying, because I don't think it's fair just to talk about just the positive side of it. I think you can poke holes in any of these things, and I think it's also fair to say this is a new industry. It has its bumps, but I also think that investors, borrowers, anybody should not go into this blindly. Everybody, first of all, like I have on my first slide, I'm not an attorney, I'm not a securities officer, and I'm not making recommendations that you work with specifically any of these platforms. I just wanted to bring them up to highlight ones that I thought were worth looking at, but anybody that you work with, and this, of course, you'll hear this in real estate investing, and I'm sure you guys say it yourselves, everything's a risk, but you need to look at these platforms and make sure that your goals are aligned, that your values are aligned, and that you trust the people behind it, and that you trust their money. Also, if you look at Patch of Land as an interesting example, look to see how they've restructured their company so that if you're an investor or a borrower with them, your deal will go on even if they go under. And I thought that was a really incredibly smart thing to do. And it's all over their website. It's not hard to find, and particularly in their About Us or their FAQs, because they got people asking, so what if your company goes under? What happens to my deal? So they structured their company in such a way that your deals can go on even if their entity shuts down. So again, what the critics are saying. So investors in crowdfunded properties have little control, and they have to trust the developer or operator to successfully manage the property. So once you buy into, if you're part of the crowd and you're just buying into it, you're just not going to have any control. Versus if you invest offline with, a lender, or, in our world, offline as private lenders, people have some control and maybe not as much, but they can certainly, in our world, they typically are in the geography and go drive by the project. So real estate crowdfunded investments are not as liquid as other things. They're not traded, and so it's hard to access the cash in an emergency. So that's one of the things people are worried about. There are no guarantees. Investments are not insured by FDIC. So unsophisticated investors can get hurt in real estate crowdfunding. Even experienced investors can take a hit if a project goes into default or if the property dips in value. And I'm sure there's a lot more things that we can come up with. The point is that it's not a perfect industry, but I think the growth and the excitement is worth paying attention to. So what's the future? So Title III is expected, so it's expected to pass in September or October of 2015, but it won't be activated until early 2016 from what I hear. But when that happens, it's going to open to non-accredited investors, which is the exciting part. So if you look at this stat, in 2015, 258,000 active accredited investors are in the market. But when non-accredited investors, so anyone over the age of 18, are allowed to participate in online investing, that number could jump to as high as 233.7 million people. So, imagine what that means, even times $100, what that means for the potential. So some of the other things, so I did a little research. By 2016, the crowdfunding industry is on track to account for more funding than venture capital, according to Mass Solution. Real estate crowdfunding investments, oh, I'm sorry, that copied from the last one. So sorry about that. So the opportunity. So the opportunity for lenders and brokers, I think the opportunity for borrowers, directly borrowers, and for investors is pretty clear. But for lenders and brokers like you and me, I'm also a private lender, and I work with a company who is a California licensed broker, Allied Wealth Financial, as one of my entrepreneurial entities. The platforms want your deals. And so what we found is they want to be competitive. The biggest problem they're having is deal flow. And so if you're wanting to expand your business, you have an opportunity to work with the platforms to access their money. They're working really hard to keep their rates competitive. They're open to negotiating with you. And two of them that I know of that have broker programs are Lending Home and Patch of Land. And I'm sure there's other ones out there. So I'm not suggesting you just look at those. Those are just two that I happen to know of. But I think there's a lot of them out there, and they do a lot to educate their brokers and communicate and help onboarding. They've done a lot of work on that side of it as well. Oops. So again, like I mentioned earlier, I've written a crowdfunding report so that you don't have to dig through these slides and pull out the information. It's at my website, topdekk.com, and if you just go to the top, there's an area of free reports that you can just download it. There's one for small businesses and one for real estate. And if anyone has any question or want to talk to me, feel free to reach out at Carolann at topdekk.com. So that's it. I will turn it back over to Christy, and thank you very much. I appreciate it. And if there's any questions, I'm happy to stick around and answer a few questions.
Okay. I just lost my questions panel. So we do have two sitting here.
Okay.
Sorry.
I'll go back to the last slide. I don't know how I ended up in the first one. I'll go back to the prettier slide at the end. So go ahead.
The first question from Lyndall is, do you have any thoughts on Realty Shares?
So Realty Shares is a great company. So they've been around since the beginning. The guy who runs that, Nav, and I forgot his last name, is highly reputable. I think they really do mostly commercial, but they've got a great reputation. So that's really all I know about them, but they do have a really great reputation.
Right. Okay, and then the next question that came through here, let me get back to it, is do you know where we can find a little more information about Title III? Do you know what the limits will be for the non-accredited investors?
So I don't know of any limits, but there's a really great article on, there's a website called so you can go also right to the government website. There's an sec.gov website, and search Title III, and the full explanation is on there. And it's pretty well written. It's not hard to dig through. I don't know of any limits on Title III. I believe it's really kind of designed to do the opposite, is open up. Yeah, I know you have to be over 18, and that's the only limit I've seen, or the only criteria, I would say. And I've heard also, people put out there a minimum of $100, but I'm not sure that that's part of the SEC, or if that's just something platforms don't want to deal with you less than $100. So I'm not sure which that is, but there's a great SEC website.
Okay, perfect. Okay, let me get my questions back out here. There are a few more that are coming in. Great, guys. Keep your questions coming in. These are fantastic. So Luzon, he says, what type of client protection do these online portals provide to private lender clients?
So that's a great question, by the way. Thanks for asking that. So different platforms provide different protections, but I happen to know, and I'm most familiar with Lending Home, and I'm not promoting them, by the way. I'm just happen to be most familiar with them because I've talked to them a lot about this. But I think they're an example, and if one platform does it, you can be reassured that the rest of them are going to catch up. But they'll actually create kind of a white label version of the path that you bring your lenders into. So they will go to extensive means of protecting your clients because they want to work with you. And so their goal is not to take your clients. Their goal is to get your deal flow. So they will go to extensive means to create white label versions of their online and their paper versions so that your clients are protected. But that's a huge key point, and thank you for bringing that up for this group because that's something they're keenly aware of, and so I imagine if Lending Home is doing it, most of them are.
Great. Okay. Next question is, how can brokers use crowdfunding to help customers with certain costs associated with closing a deal?
So with customers to reduce the cost of closing a deal. So with crowdfunding, I think what you'll find is that they're even negotiating on their closing cost. So let's say that you have clients that as a broker you want to take your deal in and you have partially funded, you would have to want to work with them and bring your deal flow through them at least partially, but they have built such scale and resources that they're even negotiating on their closing costs, what I'm finding. So you could get a reduced closing cost from them, but of course the whole picture has to make sense for you. But they do for sure negotiate on the closing cost as well. Okay,
great. Let's see. We've got a couple more that are popping in. This is fantastic. 11 people are asking questions.
Great.
Okay. It says, we're a hard money lender and always need to raise capital. What's the best site to raise money and cheapest?
Okay, so to just raise money, to go in, again, so going in, there's listing sites where you can go out and put your deal up on a listing site, and they'll connect you. And there's several of those out there. The ones where really the crowdfunding platforms where they're bringing money to you are sites. The sites that work the most with rehab and those kind of deals are going to be, again, Lending Home and Patch of Land. And those are probably the two most competitive that I've seen right now in the residential. Now, if you're talking commercial, there's Realty Shares also is great for commercial, Fundrise, but like Fundrise typically does big projects, but Lending Home and Patch of Land are really competitive right now. And that's kind of why I keep bringing them up, because they are very competitive. They're really aggressive in this market right now. They're negotiating on everything, and they're doing everything they can to help and grow in this market. So those would be the two that I still recommend.
Okay. John's asking, do you have any suggestions for non-real estate startup businesses?
Yes. So so there's several. So it depends on how you want to approach it, and that's a topic also. If you want to email me, I'm happy to talk to you a little bit more. And ironically, I'm doing a webinar tomorrow for Vistage. So I don't know if you guys know who Vistage is, but there's a webinar tomorrow, and I'm doing it on the flip side of this, which is for small to medium business for fundraising. And so there's several different categories of raising funds for a small business, and whether it's a startup or whether you have a business that wants to grow. But Kickstarter is a great way if you've got a specific something in mind, and you have a plan that you want to get funded, and you're willing to put the work in the campaign. It's a really good way to go. The other options are things like, and it really depends on whether if you're just starting up, you're really looking at probably some kind of a debt relationship, or if you have a business that you want to grow, then you're really looking at a company like DealStruck. So DealStruck, if you have a company that has been in business and you've got $15,000 a month in revenue, they'll invest in you on a debt basis. And then there's some equity platforms as well, but there's so much criteria to whether you're a startup, whether you've got an existing business, how long you've been in business, whether you're willing to give up some debt or equity. There's also some royalty-based platforms out there, but if you want to email me at Carolann@TopDeck, I'm happy to send you some notes or get on the phone and walk you through what I know.
Okay, great. And it looks like we have two more questions. So which crowdfunding platform had a minimum investment of $100?
That was Fundrise.
Okay, Fundrise. And then looks like last question. Oh, we had another one pop in. So we have two more back in the queue. It says, is raising $100 million possible with crowdfunding, even if it is in tranches?
Yes and no. So what they would probably do, so if it's $100 million, and I'm assuming it's a commercial deal, of course, if it's a tranche, you really would talk to a platform that is probably bringing in hedge fund money and probably mezzanine type funds with debt and equity. But yeah, I've heard of it happening. I mean, look at the Tower 3 of the World Trade Center. You'll see things up there in Realty Mogul, big hotels, and so there's a lot of specialty players out there. I wouldn't say Lending Home and Patch of Land are not the ones you go to do that type of funding with, but certainly the big commercial players, you bet. Yeah, I do believe it's possible.
Okay, great. How important has the self-directed IRA market been to the crowdfunding platform so far, and where do you see it going?
Okay, so it is important. It's been difficult to, I would say, activate the self-directed IRAs, depending on, of course, who the custodian is. Pinsco is very active in the crowdfunding market, and they've got a crowdfunding portal, but custodians can't tell their clients what to do, so it's difficult from that perspective. The other thing is when you have a self-directed IRA, you have to fill out paperwork and justify your investment, whatever you do, to your custodian. So I would say that QRPs, and again, I'm not going to claim to be an expert in this, but from what I understand, and what I use personally, by the way, is I have a QRP, and so my QRP gives me checkbook control, and by the way, I signed it up through one of the AAPL members, but it's a common tool. But self-directed IRAs are equally important, and they're poised to get more and more involved with it. So I think they're really important. They just have had, it's been a little slow getting out the gate because of the requirements of the custodians.
Right. Okay. Two more questions in queue. do you have a feel for which crowdsourced platforms are most cost efficient and provide best reporting and maybe updates back to the investors?
So this is one of the things that they all compete pretty well on. So if you're looking at someone who really talks about their platform, their technology, I would say that Lending Home really has incredible reporting. You know, the guys who funded it have a heavy technology background on top of real estate. I would say that their stuff is top notch.
Awesome. Okay. So next question is, I'm a private lender with crowdfunding lenders let me try this one again. I'm tripping over my own tongue. I'm a private money lender. Will crowdfunding lenders purchase loans on the secondary market via collateral assignment of a beneficial interest or assignment of a note deed of trust? And then who services loans? So
there's a little bit of different scenarios in different platforms. So this isn't a one answer fits all. Some platforms offer the service all the way through, and they will service they either themselves, they become the issuer and they service the loan themselves, or they have partners who do it. Or if you come in as a private lender and you want to do part of it yourself and get some money from them, I think they'll work with you from that perspective as well, if I'm answering the question right. But I want the bigger blanket statement is there's not a one size fits all, but from the private lender perspective, the ones who are working the hardest in this market to make themselves accessible and work with the models that the private lenders are used to working with are Patch of Land and Lending Home. And so you'll see them at your conferences and stuff, and so that's why I bring them up and I've talked to them so much, is because they're also in my world. And so they're the ones who understand your business model the best and have made the most efforts to accommodate private lenders.
Okay, so Eric has the last question in the queue right now. He says, so if we're willing to give up equity or profit for a combination of both, what are the best platforms to find investors? And what's QRP?
Oh, I'm sorry. So a QRP is a qualified retirement plan, and it works much like an IRA, an SEP, or an IRA that you can use for investments like this. So a self-directed IRA. I was also stumbling over my tongue. So it's just set up a different way. The difference is that my QRP, you have to have a company. So my QRP is set up as a profit sharing plan for my company, and it gives me checkbook control. But I get the same tax advantages. And again, this isn't my expertise, so no one email me and scream at me if I've said it wrong. You really want to talk to one of the experts at AAPL, who deal with both, and many companies deal with both self-directed IRAs and QRPs. And I forgot the rest of the other question, the other part of the question.
Okay, the beginning was, so if we're willing to give up equity or profit or a combination of both, what are the best platforms to find investors?
So there's, again, the list that I put on here and the list in the report. So go to my website and pull down the report, because I covered sites that deal specifically with that. And it kind of really depends. If you just want to go through and list your deal and find investors, there's a lot of listing sites. If you really want someone who has the money, so the difference is either you're listing it and then you evaluate the investors, and it's more like a lead gen site, and I talked about a couple of them here. The other side of it is that you work with someone like a Patch of Land or a Lending Home that are in our space, and they actually bring you the money. So you don't have to go out and vet the investors or find the money. So there's two different scenarios. And so those two are the best to work with in the private lending world. So you could talk to others, like so Fundrise really does more commercial. Realty Mogul does commercial. So if you're doing, rehab and, fix and flips and single family residential, that sort of thing, it's, Lending Home and Patch of Land. Okay,
great. I don't see any more questions that have come up today. So if anybody want to get it in real fast, now's the time to do it.
Well, that was great.
Yeah. Otherwise, you can follow up with us at AAPL or directly with Carolann. Either way, we'll get you the answers that you need. And for hanging around today, let me go over to our upcoming events for the next presentations. is we got one coming up real quick, Wednesday. Our hashtag Webinar Wednesday, July 29th. It's how to leverage your lending dollars. We're going to do that one a little bit later. Then coming up in August, our first one in August, is me. How to use social media to connect with influencers and customers. That's also going to be later in the day. You can always find more information, of course, in your emails. I send you tons of emails. But if you're ever looking, visit the website, aaplonline.com. Go into the events tab and search your way through our calendar and get a better website. And for hanging out all the way to the end today, non-members, if you are finally going to join us, it's going to be 25% off any level of the membership, but you've got a week to take advantage of that. So that'll be until Wednesday, that's a typo there, July 22nd. Doesn't apply to anything going on with the annual conference, so don't even try it. Linda's on the line and she can hear me. And then people who are members, or maybe even a couple of you who I see who need to renew, I won't name names, but I see you. You could have $50 off your professional training center if you're looking for your certifications or interested in taking the digital version of the Certified Private Lender Associate, and then 25% off your renewal. Again, by Wednesday, July 22nd, contact us for information, contact me, or just information line at info@aaplonline.com. And I just want to thank everybody for taking a little time out today, and Carolann for a fantastic presentation that I learned a lot myself. That was great. And we'll see you guys again in a couple of weeks. Thanks so much. Have a great afternoon, everybody.